Hello guys, welcome to the Black Forex Academy. Today what we're going to be learning is how to trade the head and shoulder pattern accurately. Without further ado, let's dive right into it. So, what's a head and shoulder pattern? The head and shoulder pattern, well, it's a pattern that is self-explanatory. It's a pattern that takes the form or shape of a and shoulder, head and shoulders, right? So literally this pattern actually shows you or has the same structure as a head and shoulders, right? So it has a head and then it has shoulders, just like a person. A person has head and shoulders, right? So this head and shoulder pattern, from my personal experience or from my personal view, is one of the most accurate pattern to be trading prices with. Now, it doesn't matter what prices you're trading, be it forex market, indices market, stocks, futures, whatever. This happens to be one of the most reliable patterns that you can actually use in your trading to jump forward or to push forward your trading career. That is why I've decided today to make a special video on it. So I hope you'll get value out of it. Okay, so now let's begin to it. Now, how do you trade a head and shoulder pattern? Okay, the head and shoulder pattern, first off, before actually taking a trade in the head and shoulder pattern, you need to wait for it to actually form. Like you need to wait for the pattern to be complete. The pattern has to have the left shoulder, okay, the head, and the right shoulder. That's when the pattern is complete. Now, when the pattern is complete, you need to actually add this zone here where there is a base or where it supports the support zone, which actually holds the whole pattern. You need to actually add that, and then this this base is what we actually call a neckline. Okay. Now, once the prices reach here on the neckline, that's when you have to keep your eyes on the pattern. You have to be very keen. You have to be watching the pattern closely. Okay. Because at this point in time, that's when you'll be taking the trades, depending on the type of trader you are, of course. Now, there are two types of traders, from my understanding, like the ones that actually can be trading here. Now, there are breakout traders and there are retest traders. Okay. Now, from the breakout traders perspective, like when the pattern just breaks below this neckline, that's when you'll be taking the trade. Okay. Like when the pattern just pushes below this neckline, you'll be jumping right in, you'll be taking the trades, you'll be diving in, you'll be taking your trades. But for the conservative traders, what you'll be doing is that you'll be waiting for the retest and then taking a trade after the prices have already retested the neckline. Okay. So depending on the type of trader you are, you'll understand why you need to be taking a trade. Okay. Now, so with that being known, here around here somewhere, right? Because it doesn't matter where you're going to be taking the trade, whether you're a breakout trader or you're a retest trader, all of our entries, I'm saying our because I'm also a trader. I'm actually a retest trader. I don't believe in the breakouts because there are a lot of fake breakouts and all that. I find it to be more safe trade, retest trades, because you're actually sure the trade has broken out of this structure, right? You're actually sure that the trade has broken out of this structure. Like for instance here, if you actually take this trade maybe here after the breakout, you can never be sure if the trade has actually begun the move. But after a break and retest, you're actually sure the structure has been broken and now it has been retested at prices. And now it's time to actually take the trade. So, but anyway, who am I to judge? Everybody has their own way of trading. So all of our entries will be around here somewhere after getting the confirmation candlestick, of course. So let's look at where the pattern will be invalid, right? Now, for this pattern to be invalid, prices have to push all the way up here above the neckline. Okay. If prices push all the way up here, all the way above here to up above this neckline, that is when the pattern will be invalid. Like that's when you should understand that, okay, this pattern is no longer valid. And if you had a trade, it has to be stopped there. Like you have to place your stop loss there, that when the prices reach here, I have to cut my losses and accept my loss. Well, next time we'll look for another entry, right? So that's why you need to be placing a stop loss above the zone for conservative traders. For aggressive traders, you have to place the stop loss just above your entry candlestick. And when I say your entry candlestick, this is what I mean. For instance, this is your entry candlestick. Now, it doesn't matter what type of entry candlesticks you use or confirmation candlesticks you use, be it a Gaussian candlestick, breakout, whatever, pins, morning stars, evening stars. But at your entry candlestick, just above the candlestick, for aggressive traders, this is, let's say this is a bearish engulfing, let's say, right? So this is a bearish candlestick. So that means the prices have closed all the way down here, right? Now, your stop loss should be above here somewhere, right above this point here. That is where your stop loss should be, okay? Above the candlestick for aggressive traders. But for conservative traders, which I happen to be part of, our stop losses would be above this zone so that we can actually give the trade room to breathe, room to actually maneuver in the market, even if there's no enough liquidity and prices decide to retrace back to this zone. I'll still be in the trade because prices won't hit my stop loss because it's above the zone. But for aggressive traders, it's actually quite risky. Yes, you'll be risking less, but it's risky because if the market doesn't have that much volume, doesn't have that much momentum, prices will push back and you'll be stopped out of the trade. Those are just facts. Now, let's look at where our entries or our targets will be in this particular pattern. Now, for a head and shoulder pattern, while trading this pattern, you need to understand that the distance from the head, from the tip of the head to the neckline, needs to be the same distance from the neckline to where your take profit should be. So for instance, the distance from here to here, right, has to be the same with the distance from the neckline all the way to here, all the way down here to where your target will be. So down here is where you'll be placing your take profits, okay? All the way down here is where you'll be placing your take profits. Your take profits will be the same distance from the head, from the tip of the head to the entry, to the neckline, should be the same distance from your entry point, which will be around the neckline, to where your targets will be, right? So down here will be your take profit, okay? Now, that's how you can actually trade a head and shoulder pattern, theoretically, of course, by using the analysis. Now, let's go to the charts and see how we can actually use this data to actually look for a back test, or we can actually back test prices and see if this pattern actually works in its accuracy the way we have looked at it here. So we are on the OZZ chart. Okay, I believe I sent this in the free group. So for those that are following, I believe you'll have caught this move. It's a great bullish move. Still has way to go all the way up here. Never mind that. Let's look for a head and shoulder. Let me pull back here again. So let us look if we can get a head and shoulder pattern in this particular pair. If we miss, never mind. We're going to look for it in another currency pair. But the main point is at least we look. And I'm in the daily time frame. I believe the daily time frame is one of the best time frames for you to look for patterns. So so far I haven't seen any head and shoulders. No head and shoulders so far. Yeah, I got one. I think I got. Yeah, I got one. I got one head and shoulder pattern right here. It's a little bit blur, but that's the way the market are. You don't expect to find everything like the way it's written in the textbooks, the way you're taught, like for it to be picture perfect. you have to actually adjust to how the market portrays, right? Because the market moves in waves. So here's the pattern. For those that have not yet seen it, this would be your neckline. Okay. Here would be your left shoulder. Here would be your head, and here would be your right shoulder. And okay, that's the way it is. This is the left shoulder, this is the head, this is the right shoulder. And as you can see here, prices, after breaking, they retested and then retested this neckline, because this would be the neckline, of course, as I told you. And as I told you, while trading this pattern, you have to wait until the neckline is broken. If you take the trade before the neckline is broken, you are not trading the head and shoulder pattern. I don't know what you're trading. You might even make money, but that's not the head and shoulder pattern. You'll be trading something else. Now, for the head and shoulder pattern to be valid, the neckline has to be broken first. Until the neckline is broken, the head and shoulder pattern is not complete. Okay? Now that's the rule. That's the rule in trading this pattern. Okay? So as you can see here in this pattern, in this particular pattern, the head and shoulder, actually the neckline was broken. The neckline was broken here, nice, and then retested, and then prices kept on pushing low. Now let us look on how we can actually incorporate the things that I taught you in this particular pair, right? First things first, we're going to be looking at the entries. Now, for the breakout traders, as you can see here, this would be your entry candlestick, because this was the candlestick that actually broke below this neckline, right? This was the entry candlestick, and then it closed below this zone. But then after that, the market didn't have that much momentum, pushed back up here, and then retested the zone, and then pushed back again, retested again, and then sort of kept on moving, right? Now, here's the disadvantage that the breakout traders have. As I told you, this, look at this. This was the false breakout, and then the market came back and then pushed back again, and then came back again. Like, it's a mess. It's a mess, guys. Breakout traders, it works if the market has much momentum. That is when this strategy actually works perfectly. If the market has a lot of momentum, it has a lot of volume, that's when this breakout strategy actually works perfectly. And that doesn't happen often. So if you're a breakout trader, I highly recommend for you to actually look and try trading a retest strategy, because it's actually more safer and you'll be saving a hell lot of money from your tradings. Okay. But for instance, here, if you took this trade and this was your entry trade, that means your stop loss would be around somewhere here, right? Now, if your stop loss is somewhere here, if you can actually see the market came back and then stopped you out, that means that was a stop loss. Maybe you lost 2%, 3%, depending on your risk factor, but that was a loss. Now, for us, the retest traders, the market came back and then pushed all the way up here, right? This would have been our entry candlestick. After the retest, this would have been our entry candlestick, right? Now, our stop loss would be above here. For the aggressive traders, it would be a little bit here above the candlestick, right? And then for the conservative traders, would be somewhere not that much far, but because the zone is thin, would be above here somewhere, just a bit of a 10 pip difference. Not much, but it's something. Now, after this confirmation candlestick, let's see what happened. The market came back, retested here. Even for the aggressive traders, after the retest, would have still been in the trade, and then the market kept on pushing lower. So that means here, right, after this retest, the market kept on pushing lower. Now let us see, because this would have been our entry. Our entry candlestick would have been here. That would have been our entry, right? The stops would be here. Now, where would our target be? Is I remember I told you, our targets have to be the same distance from the tip of the head all the way up here, all the way to the neckline here, right? Now, once we take this neckline and then we put it like the distance from the neckline to the same distance from the tip of the head to the neckline has to be the same distance from the neckline to where the take profit would be, right? Now, as you can see here, from here is where the take profit would be in this some sort of zone. It looks like it's a zone, as you can see here. Yeah, so that would have been our take profit at around this particular zone, but a little bit higher like that. Yeah. So here would have been our take profit. Now, did the market, after taking our entry, did the market respect and actually move in our direction? After taking the entry, the market retraced a bit, didn't stop us out, and then kept on pushing all the way down here, consolidated a bit until smashing our take profit here, and then kept on pushing low. So that means the market respected this pattern. As I told you, the market respected the head and shoulder. This is one of the most probable pattern to occur, right? And to actually give you for the prices to move in your favor. Look at this move. It's a sweet move. Now let us look at the risk to reward factor. Like for instance, in this particular trade, our entry would have been here. Our stop loss, let us put for the conservative traders all the way up here. And then for the take profit, it would have been somewhere here. So this would have given us a 3.2, 1:3, 1:3 for the conservative traders, and it would have been a 1:6 for the aggressive traders. So as you can see, guys, this is one of the best patterns. This is how the pattern would have played out all the way down to take profit, hit take profit, and then kept on moving. So that is how you actually accurately trade the head and shoulder pattern. I hope this video has been of value to you. Please give it a thumbs up. Don't forget to subscribe to the channel. Thank you. Till next time. Peace and love, guys. Peace.